winning millions should be a dream come true, right?
And it is in the short term, but then that dream can quickly turn to a nightmare.
But it shouldn't. This is easy money. Can be a trap.
What they do is they get money given to them, and as quick as it comes in, it goes out even quicker.
What would you say is the main reason for their failures?
Very simple. You've got to think like a wealthy person before you become a wealthy person. Yes, it's great to have this in the short term, but how much money have you got to sustain that?
So many people go broke, right, even after winning millions. The question to everybody here is like, once you're building wealth, what should you do?
One of the biggest things you taught me that changed my life from being in investment mastery.
I get messages all the time asking me how I went from $100,000 in bad debt to a $13 million portfolio. By watching this show every week, I will share exactly how I did it, how I achieved it, and the lessons that I've learned along the way. So do me a favor and please subscribe to our channel. It's simple, it's free, and it helps keep the show going for you. This is where you eat and we talk about changing the way that you think about money, with insights from successful investors, entrepreneurs, and everyday people taking control of their financial futures. So double check that you're subscribed, and thank you for being part of this journey.
Welcome everybody to another episode of the Lunchtime Investor Show. Remember, this is where you eat and we talk, although I'm desperate to eat as usual, and sandwich is right there. We have Keith.
Hey everyone.
In the studio, and we're really looking forward to this because this is something which is very dear to your heart, of course, which is why lottery winners go broke and what to learn from it. You do play the lottery?
No.
You seem to me like somebody who would.
Why would I?
In the past.
In the past.
I hadn't finished my sentence.
Oh, okay.
Let me finish at least.
No, it's a pure gamble, but we're going to talk about that.
Was it 14 million to 1 chance?
14 to million.
So there is a chance.
There is one chance. Yeah.
That's direct quote from Dumber and Dumber, the film. So winning millions should be a dream come true, right?
Should be.
It should be.
And it is in the short term, but then that dream can quickly turn to a nightmare.
But it shouldn't. I mean, if you have the skills that we have, that would turn into hundreds of millions.
But that's the problem. 90% of people out there don't have the skill.
90?
Yeah. Like the population that actually take control of their money, small amounts.
I think it's probably more.
I think 10% actually care about their money and do something about it.
Yeah.
90% of people go,
or would be smart enough to at least get somebody to help them.
Correct.
Who, by the way, is not like an advisor or somebody like that. It's somebody who has actually made the money.
Correct.
They understand what money is all about. So we're going to talk about why money mindset is crucial when growing wealth, and also why easy money, because this is easy money, can be a trap. Because if you don't know what you're doing and suddenly you get a lot of money very, very fast, I mean, it's honestly the worst thing that can happen to you, in my opinion, compared to earned money, right? Because you have to struggle, it goes up and down, but then you know what to do. I mean, you in your trading and investing, I think you told us a couple of episodes ago, or maybe it was just one-to-one, where you said, to start off with, I used to make all these mistakes, but now I've calmed down a little bit.
Correct. And it's just the emotion that comes in play when you get money, right? And we always say it, you've got to think like a wealthy person before you become a wealthy person.
If you want to be a millionaire, be a millionaire. Like,
correct.
Think like one, act like one, talk like one.
And when it's get rich quick, all of a sudden you're like, oh my God, I've got all this money. I don't know what to do with it. What do? Go and do stupid stuff. Stupid stuff. And that's why when it does, and I know everybody wants to get rich quick, but actually it's a blessing to work hard for it. I know that sounds weird and it's, not very cool and everything, but then you value money. And it's like when you pay for something, you go, do I really need it? Because I worked damn hard for this my entire life. But getting too much of something good too fast is like fame, for example. Yeah. It goes to people's heads. 30 seconds, right? You get 30 seconds of fame and then you're done.
Is it 30 now? It's 15 seconds. You've just doubled it.
I think it's 30 these days.
30 now. Okay. And also we're going to discuss lessons that every investor can apply, right? Without winning the lottery. All right. So I have got a question to you, which is around 30% of lottery winners file for bankruptcy within 3 to 5 years. Actually, before the question, what do you think of that?
That is an outrageous stat. And the fact is, they spend more than they actually have. You see a large...
How is that possible? That they spend more than
if you think of it, right? You've got 10 million in the bank.
Yeah.
You go and you buy a house for 8 million. Okay?
Why would you buy an $8 million house?
Just think, theoretically, if you buy it...
That makes so much sense.
Okay, so if you buy a house for X amount of money, okay, and it's like, this is my dream house, you've got to realise you've got to upkeep that house for the next 30, 40, 50 years. How much money is the upkeep?
Right.
How much money do you need every month to make that house go?
So they don't have any cash flow to actually pay for it.
It's like buying a Ferrari and then not having money to buy petrol.
Yeah.
Then why have you got the Ferrari? No, seriously.
No, that's right. Or even like a tire. I remember when Madrika had a Bentley. It was a lovely car and everything, and she did deserve it. She's been working since the age of 17. And she got it. I'm not into cars, but she got it. I mean, she said, do you realize, like within 8 months, you've never actually even been inside it? I'm like, oh, okay, well, let's go then. I'm just not interested. But the thing is that changing anything, the slightest thing, was immediately £1,000.
Of course. But that's like even on my car, Mercedes A-Class, I had a bit of a damage on the door, and that was like £1,000 just for a new door. And obviously the labour work and all that stuff. But again, you've got to think of the longer term picture. Yes, it's great to have this in the short term, but how much money have you got to sustain that? And it's that sustainability that kills people, and that's where bankruptcy comes into play.
Sustainability kills people. All right, so here I've got a question for you. With so many people going broke, what would you say is the main reason for their failures, financial failures?
Very simple, mindset. They don't understand the true concept of money. What they do is they get money given to them, and as quick as it comes in, it goes out even quicker.
So this is the 30% of lottery winners. By the way, is that like 30%? But that's 70% don't. So that's pretty good.
But
focus on the glass half full, please, Keith.
But with this 30%, is this the jackpot winners or the 30% of all winners?
I told you. This guy knows more about lottery than anybody else
if you look,
in this conversation.
The chance of winning £10 on a lottery is a lot higher than winning £10 million. So out of the 30%, is that the ones that win the jackpot? Go bankrupt.
I think we're talking about the jackpot here.
Yeah.
The big kahuna.
The kahuna.
That's it. So you think it's mindset in general or financial literacy or a bit of both?
I just think growing up, a lot of people that played the lottery and have won the lottery don't have the background of the true concept of money, how money can work harder for them. And they've just gone through that rat race like we spoke a couple of weeks ago.
So do you think it's only people like that or is it like normal people? They've got a good job, but you know what? I've got a good job, so just spending £1 or £2 on a lottery, so what? So what? You never know. You might win.
You might win. And I know a lot of people that do that. They have a great job. They buy it. No, of course, but it's how I grew up. I grew up with that in my household. Like every Saturday night. No, but it's true. Every Saturday night, my mum used to love to do the lottery, not to be like I'm going to be a multi-millionaire. It was just that. It was that fun aspect of doing it.
So that's like gambling. You go to a casino, etc.
And then
so I was in Las Vegas for 2 weeks.
Okay.
Like, how many times did I gamble?
I know this story. Once as you were leaving in the airport.
That's right. Not once, apart from at the. I thought I can't believe I've been here for 2 weeks. So I put it in the slot machine, walked away, defiantly, like somebody was watching or something. And then did the whole thing, walked away, and then I did look back. Obviously, I lost. Of course I did. Well, I don't know. No, I lost. Of course I lost. Somebody has to pay for the whole bloody hotels and everything. So so many people go broke, right? Even after winning millions. The question to everybody here is like, would you go broke? Like, do you have the financial literacy? What would you do with the money? And that's the question. What would you do with the money? Yeah. So here is a real example of exactly that. So we're going to play this video, and Keith, let's take some notes as well.
Ian McGee had a dream, a vision of hitting the jackpot. So he took a leap of faith and bought 11 tickets across 4 towns. And miraculously, he was one of 6 winners, winning $10 million. So Ryan was then on top of the world. He decided to buy a brand new shiny red Ferrari Spider and proudly showed it off to his son Lee. He then bought a massive house, which even included a champagne bar. He did exactly what everyone says they would do if they won the lottery. And he even had a wife that was expecting a child, so life was great. However, the universe had other plans. Firstly, he receives lots of parking fines. Then, in a chilling incident, he crashed his Ferrari on a winter's day. And his business at the same time goes under. And then, Margaret and himself part ways. He then even faced legal trouble and a driving ban. And the crown jewel of his success, his massive home, was later auctioned off. Now, studies show that 1/3 of lottery winners end up bankrupt. So sometimes winning the lottery can actually be the worst thing to happen to you.
Oh I have to tell you. I'm so frustrated by this video. I think I'm going to let you speak. Otherwise, I am literally I'm going to freaking explode.
Gonna explode.
The guy had 10 million.
Yeah, 10 million.
And the very first thing he does is buy a brand new. Why does it have to be brand new for a start?
Because the ego.
Okay.
You think, I've got this money, I now need to look wealthy. The funny thing is, the most wealthiest people, you wouldn't even know they are wealthy.
Absolutely.
Because they don't show it off. Why? Because they allow their money to work hard for them. Instead of getting the Ferraris, the house, the clothes, what do? They put their money to work, because then they know it's sustainable for the next 10, 15,
Thank you.
20
That's what
years.
wealthy people do. I got this Honda Accord, right? And I loved it. It was $2,000. And I got it down to $2,000. It had this lovely little steering wheel, and I was told I need to change it for a better car because it didn't look like I was wealthy. And I was like, but I'm walking the talk. I teach people, don't spend your money like an ego thing. An ego. I see what you mean by an ego thing.
I do think
I love that car.
Yeah.
And it got me from A to B, funnily enough.
But then it's all about, when did you upgrade a car? Right? Did it happen in the next year? No, it was probably in the next couple of years. You allowed your money to mature in the markets, investing, and then the money that you made, part of that profit out, reinvest into your car.
So several things there. The brand new. Why did it have to be brand new? You said because people like to, but he's got the money. Why does he have to look like he has the money? Like why? What's the mindset behind that?
Because people don't know what goes on in the background. Right? You can have the most amazing life, social media star, the amazing life, everything looks perfect, but you don't actually know what the real life is like. A lot of the social media stars, what they do, they rent the flats to look good. They rent the cars.
So you're saying he thought this is what rich is?
Yeah.
Okay, I got it. And so I need to have a brand new. And what about this house? Now, obviously, they showed this. I mean, I have to say that was one hell of a house. It's like a mini hotel. But again, that must have cost like 3, 4, 5 million. Well, depending where.
Yeah.
So again, the money's gone, isn't
And
it?
the champagne bar.
The champagne bar. And then he said he did what most people would have done. I was like, I wouldn't have done that. What do you need a champagne bar for? Now I have to buy expensive champagne.
This is the upkeep that I talk about,
yeah.
right? How long can you maintain that lifestyle?
Yeah.
If you don't have consistent cash flow coming in after winning the lottery, that lifestyle is just going to dither away. It's going to be nothing by the end of that.
You need to use what we call the jar system or the pot system. You need to. I think he should have spent 1 million on something, right? But not a brand new. I can't. It was probably a brand new house as well, right?
Most likely.
Flippin' heck, man. All right. Then he said something about the universe had other plans, as if the universe was conspiring against him or something. Well, he won the lottery, so if you do believe in that, then he had, what was it? He suddenly received lots of tickets, as if it wasn't his fault.
Yeah.
Do you think he might have been involved in that,
100%.
or the accident,
So you're telling me,
or the divorce?
The universe just goes, you know what? You've parked in a bay that you're allowed to park in. Here's a parking ticket. Come on.
There you go. The universe conspiring against you again.
That's so bad. But again, if you look at it this way, money,
his business
goes from one hand to another.
It's not his fault, Keith.
The business,
It's the universe.
The universe is doing it to him.
Okay, and 30% go bankrupt. Listen, I don't look. There's one thing about now. This is shocking to me because I thought the first time we talked about it, it was 30% like lose the money that they got.
Yeah, and back to
that was shocking enough.
Mm-hmm.
But to say 30% go bankrupt, that means they were that means they were in a worse position than they were when they started.
Correct. And we always talk about spending less than you earn. What do? They spend more than they earn. And that's the debt cycle they go
So
through.
that makes me think that cash flow is much more important than just having one big win then.
No, it is. But if you win the lottery, right, and think of it that you won the lottery, you put 3 million aside, and you make 1% every month on that 3 million,
Mm-hmm.
you're set up for life.
Okay, so you know how to do that, but most people don't, right? Because 1% doesn't sound like a lot, but when you say per month, and let's say non-compounder, that's 12%. Most people don't know how to make 12%.
You make 1% on 3 million. You take that 1% out, you're still left with the 3 million. You have 1% again. If you take that 1% out, you still got 3 million. All of a sudden, the 1% that you're making is your cash flow.
Mm-hmm.
And in the market, it's easy to do that.
You've got to learn what to do.
Yeah.
You've got to learn what to do. I don't think it's easy. I think it's simple. I think you've got to practice, then it becomes easy. Because to start off with, I mean, this guy, ugh.
But what do they say? It's simple in theory, hard in practicality.
Mm.
Like, we can all learn how to fly a plane, right? We can read books, watch videos, but until we actually get into that position to fly a plane and something happens, your emotions come involved, then it's not easy in that practical sense.
So they talk about like lifestyle inflation, right? He had a massive inflation of his lifestyle that he just was not prepared for, basically. Most people aren't prepared for it, which is interesting. I mean, you can't really blame them in a way, although I do. But you shouldn't judge, although I do, but I shouldn't. But should he have been prepared? I mean, you're prepared to win, so why not be prepared for it?
But you've never been prepared for
Because you never had that kind of money.
Correct.
Yeah, okay, fine.
Your lifestyle has never been in that position. So
Okay.
therefore, you don't know how to handle that.
So
And
you need a
again-
system. You need a system.
Yeah, but the biggest thing is millionaires or wealthy people. Let's just say wealthy people because you could be billionaires now. Wealthy people don't become wealthy like that. What happens
Right.
is they become wealthy, make mistakes, learn from the mistakes, work hard to come back. And guess what they do? Make another mistake, lose more money, work hard to come back, another mistake. And all of a sudden they've had 4 or 5 setbacks. And then once the money is there, they understand the game of money. They
Yeah.
understand that, do you know what? I have to work hard for this because money can come easy, it can go easy. So how can it be sustainable now?
But does money come easy, go easy? If you know what you're doing and you work at it, it shouldn't go easy.
No, it shouldn't, but it does, right? Because stuff.
Well, I don't think it comes easy either. It doesn't come easy. You've got to work for it. So when you say come easy, but I guess you're right. So if you work hard for something, you're also going to keep it because you know the value of it.
Yeah.
Whereas you're right. If it comes easy, it's probably going to go easy because you don't have a system in place, right? So once you're building wealth, what should you do?
I think one of the biggest things you taught me that changed my life from being in investment mastery is the jar system.
Yeah.
Understanding where to put your money. And everyone's like, oh, you put your money aside, you're boring, blah, blah. In the jar system, you have a fun jar, which you can go out and enjoy life, spend money. Because again, you want to have them experiences, but you don't want all of your money going to experiences because then what have you got left? So for me, I have my fun jar, I've got my investing jar, I've got my savings jar.
Right. So he definitely didn't have
No.
that jar or pot system. He
And that's
definitely didn't.
That needs to be taught in school of how to separate your money.
Totally. Well, we're going to put it into every household we possibly can.
Yeah.
You can download it for free, probably below. I don't know whether we're doing that this time around, but it is so foundational. I don't even want to call it basic because it makes it sound, but so foundational on which you can build high and wide. And then you've got to stick to it, and then it becomes a habit. And I do it to this day. I would not do it without. It's absolutely amazing. 10% here, 10% here, 10% here.
And it becomes so easy because you can have so many different bank accounts with no real challenges.
Yeah.
So you can have one for your bills. You can have one for your savings. You can have one for your fund pot. You can have, obviously, the investing account is different because it goes through exchanges and stuff like that. But there are so many easy ways to do this now. And because everything is digitalized, it's so easy to track.
So I've got a question for you. Should he have bought that car?
If it was part of his money that he could blow or expense.
His below account.
Yeah, his below account, his fun account. If that was part of the money for that, then yes, that's fine because you've used that.
That was the correct
But
answer.
if it was, say, 40% of what he's won
Right.
on that car, I'd be like, what are you actually doing there?
And if that so let's say 10%. So if that was for, and maybe you bought a car and something else, but it sounds to me, or it looks like he had a fun account which was like 40 or 50% or even more.
Correct. And he thought it was infinite. He thought, do you know what? This money's never going to go. Again, being a millionaire this time and age is not big. It's being a billionaire. That's the game people are playing.
Well, I mean, no, if you have 10 million, that's pretty
No,
good.
10 million. But if you have a look, everyone thought being a millionaire was that top tier.
Yeah.
Okay. It was like, this is where you have to be.
Mhm.
But now it's not. It's the 10 million, the 100 million, the billion.
I
That's
wonder what it is
people
for
want.
people here. I wonder what it is, It's really interesting.
Hmm.
Because do you actually have a goal?
I do.
Okay. So has that changed at all? Is it growing because you think,
My first goal before obviously everything was becoming debt free, making sure I had no debt in my life.
Yeah.
Achieve that.
Yeah.
So now it's how can I get to that first million? How can then I get to the first 10 million?
okay.
Because once you
But
get
are those not milestones towards a bigger goal, though?
yeah, the bigger goal for me is to be in a position that I am financially free,
Yeah, financial
Okay.
free, not financially independent.
financial
That could be a milestone
Yeah.
towards financial. Okay, so
Finan-
financial free.
freedom. And the reason I say that is because then you have flexibility of your time.
Mm.
You can choose what you want to do.
Mhm.
Okay. The most powerful people can choose if they want to work or not.
Mhm.
Why? Because the job they do it for a passion, not for
And
the
they,
money.
and they choose to work.
Yeah, because
They just don't call it work.
And I think that's the biggest thing that a lot of people don't really understand.
Mm. So whether a lottery, like if there's a big win or you receive a big chunk of money, I'm guessing the key really is you need to have a system. right? Because otherwise you're lost, or you surround yourself with people. But generally speaking, they probably surround themselves with people who themselves don't know what they're doing. They seem to. Let's have a look at this one here. This is blibbly fibbly. Really?
2000. Don't forget that.
Okay, fine. 2000. I don't know whether we can show this, but it says, where to begin managing wealth, ? Hi, I would love to hear what you blah, blah, blah. My mum was recently widowed and I've been left with multiple millions. My dad managed everything before he passed, but she's not financially savvy. Now I'm suddenly responsible for helping her manage. So now this is kind of the same thing. It's like, whoa.
A lot comes on you. Yeah.
I've thought about buying her a new house and myself a new car. So people do the same thing. Flipping out. The first thing is a new house and a new car.
In case the market changes.
I know. In case the markets change and I want to put the rest in the savings account. So what market's going to change? Why don't you put it all into a savings account? It's ridiculous. In case the markets change. What do you mean the markets change? I don't understand. But anyway, and stressed about making mistakes. And why are they stressed? Instead of being happy, because they have a system, they say, I know exactly what to do. 15% is going to go, 10% is going to go, 10% is going to go there. It's like, I want to put in a savings account until it has all settled down. I don't know what that means. The whole exercise is pretty stressful and akin to dealing with a lottery winner.
Yeah.
Right? If you were me, what steps would you take next to review her position? She has enough cash and income to live well day by day. Oh, amazing. So what would you do?
So I would be looking at building a impenetrable moat, okay? Something that I've got assets that are going to be long-standing, something that's going to be there for years to come.
Give me some examples.
So an asset that you can buy, look, if you look at the car, okay, are you buying the car to drive and look flash, or are you buying the car to be an asset and appreciating?
Well, I don't know if it's a he or she, is buying themselves a new car.
Yeah,
well, that's
so then
nice.
that's them to get day to day, which doesn't really work.
But why does it have to be new? Like, why not just buy a car?
And then the house is another thing. Is the house an asset? Is it something that's going to bring you cash flow?
Well, we had this last time, right? So if you're living in it, it's actually not an asset.
It's a liability.
It's a liability. But yes, and I think that so now they've bought two liabilities.
Correct.
This big mistake straight away.
And again, if you're buying the house and you're living in it, you're paying for that. Granted, if you are buying the house as an asset to then generate cash flow because other people are living in it and paying you the money to do that, then why not?
And in a savings account, you're not doing any of those. But it says until all is settled down. Would you spend some of it? I mean, you are allowed to buy something. It's not like you're not.
Of course. But again, would you go into that cycle and it's hard. If you've not got a structure and you start spending on something that you like, guess what that does? It increases the endorphins in the body. You feel good. And then you have that negative attachment that you feel good spending money. And all of a sudden, you carry on spending, because you want that good feeling. And I think that's what happened in the previous TikTok video we saw.
Right, because it's his money.
That feeling.
But here, you're actually responsible for somebody else's money, which I think adds a lot of stress as well. There's another layer. So really, they should be even more careful here. And they are stressed about it.
I think the biggest thing here is the mother has enough cash and income to live day by day.
That's brilliant.
Okay, what are you looking to change?
To me, that means now have a little bit, but the rest of it I would be putting into cash flowing assets if possible.
Yeah.
And if not, at least assets that have a chance of growing.
Of course. But then again, going into that mindset of, okay, I need to put my money to work, you start going down the wrong paths. You need someone that you can trust. You need someone that's been in the game long enough, because there's a lot of scams out there. A lot of people go, oh, this guy's just got money. Let me try and take that now.
I promise you, this person is probably going to go to a financial advisor who's going to put it into some name trust, like fund. And they have no idea what the fund is really about, but it sounds good. And the best thing is, oh my God, thank you so much for taking this stress away from me.
Of course.
That is a recipe, in my opinion, for disaster, because you don't know what you're doing.
What about as an investment, though, for a lot of people? Instead of a savings account, why not buy physical gold?
Okay.
Because we used to do bullions.
Not right. I wouldn't buy it right now.
No, right now, because obviously it's overinflated.
It's gone up like crazy, hasn't it?
All-time highs.
I didn't see that coming.
Yeah. Well, the uncertainty of the economy causes that.
Sure, but I didn't think it would go up that much.
No, definitely not. And look at silver now. Silver's rallying up.
Amazing.
But this would be the point that you put it in something that's tangible. It's a tangible asset.
Yeah.
When you're putting your money into a savings account, that's not a tangible asset.
But would you do stocks, cryptos, property? What would you do?
So to begin with, it depends on the mental that you get. For me, the easiest approach that I done was stocks first. Understanding the stock market, getting into the biggest companies possible, getting into ETFs, that was just simple for me. And here in the UK, you could do it tax-free, which is also a benefit. Once you do that, then the natural progression
Hold on.
is
So it's not tax free. It's only tax free if you wrap it up in something.
in a nice or sip.
Yeah.
Apologies. And then easy transition into crypto because you're already in that investing mindset. The hardest thing about going into something like property can bring a lot of good value to people, but there's a lot more overheads that you pay.
I think there are so many strategies out there that I don't actually know in property. We're going to have Samuel Leeds in soon, so that would be really interesting to discuss that. We just had Simon Zucchi in, which was fantastic.
Amazing, yeah.
So look, the main thing to do, and I think what they said was, I'm going to put it into a savings account and wait for things to settle. I don't know exactly what they meant by that, but it wasn't bad because I think that what they need to do is just pause, right, before acting, and review what their plan is before making a snap decision. I think that is a good thing to do.
Yeah.
Because actually you can do some really stupid things otherwise, right?
And I think you need a bit of guidance as well. From someone that's actually managing that money, not guidance from friends or family, someone who's actually in that position.
And by the way, friends and family, they're all going to have an opinion.
Of course they are. Because they've got their own little agenda, unfortunately.
Yeah. That's the other thing. This is very important, thank you, is to have somebody like a coach, for example. A coach is supposed to be objective.
Yeah.
They don't have, any skin in the game. So therefore, they are going to be objective and hopefully, on your side. So the problem is that emotions, isn't it?
Yeah, I think. But even better than a coach, because a coach knows all the strategies, the skills that you need to do. They can train you to where you need to be. A mentor has actually done that journey. They know the challenges that you've had.
Yeah.
They've gone through that emotion.
But
know.
finding one of those, isn't that easy?
No, it's not. And
whereas you can get a coach.
You can get a coach very, very easy. But you have to be very...
Well, why don't you get a coach in that? So there's general coaches, right? And they'll probably be able to guide you, but they haven't done it themselves. There's a coach in something specific. They could be a property coach. They could be a trading, investing coach, so you can get specific coaches as well.
Of course. And it's like taking a little step, right? First coach is giving you a foundation, all of the standard terminology. Second coach is giving you a bit of experience in a specific area. And then you work up to that mentor to go, right, now you've got the foundation. You've got the understanding in my area. This is how I've done it.
Is there such thing as a money coach? I have come across them in the States.
People have said they're money coach. And I always think, okay, how? Like, what has created you to be a money coach?
Because they probably wanted to learn themselves, and then they liked it, and therefore they got coached. So, but I see what you mean. They don't necessarily need to have the results, whereas a mentor normally has the results. So it's an interesting discussion because... do they need to be worth 10 million before you trust them, kind of thing? It's interesting because coach is not necessarily right. Okay, focus on growth, not just preservation. That's for sure.
Yeah,
need to go into something that has it. But sometimes pausing too long can also be a problem, right?
It's very detrimental to you because again, you miss opportunities.
Yeah.
Have a look at it this way: if you've not invested in crypto, we've been thinking about this.
Well, gold. Look how gold's gone up.
Well, gold as well, but crypto, we've been 2.5 years in the bear market. Massive drops in prices. Bitcoin was around 20,000, give or take. Now it's up to 110,000 per coin. Missing opportunities like that, you're not going to get in the game. And Tony Robbins says it always of when is now the best time.
But don't you think hindsight, like I should have gotten more into silver. I do have a lot of bullion. I do have the physical, but actually you're just pressing a button. I didn't do it this time, and I've missed out on the entire thing.
Okay.
So hindsight.
Hindsight is a great thing, but then from what you just know now, what are you going to do different? Because there's always a bull market in some area of the market. Next is AI and semiconductors.
Oh, yeah.
So are you not going to take advantage of that? And are you going to continue that trend?
Yeah. So let's go back to the lottery thing, right? Easy money versus earned money. What would you rather have?
Earned.
Okay, I would now like to have some easy money because I know what I'm doing there.
Of course. But if you were in my position at the beginning, you would have said the same thing. Because you would want to work hard for your money so you appreciate money.
For sure.
Yeah.
Well, I'm asking you now.
Yeah. So I'm still in the earn phase.
Oh, okay.
Because even though making consistent cash flow through trading and investing is great, I still want to work hard for my money. Because I'm not at that 10 million phase yet.
Yeah.
And the appreciation of money, I still sometimes go out and spend on stupid stuff.
Like, give me an example of something that you spent money on that was stupid recently.
Great question. So, shoes, football boots.
That's not stupid.
No, it is though. When
well, it is if you jump up and your own defender goes like that, and now you have concussion, which he has. He's got a massive headache and has to go to the doctors.
Yeah, well, that's part of the game. But again, so spending money on that. But this is your point, right? I spent money on the shoes that were over £100 for the football boots, where I could have got the non-real versions, okay, for half the price in the same store, right?
Yeah, there must have been a reason you bought the other ones. They're probably
course.
better.
But no, because of ego.
Oh, really?
Then the legit
Okay, so
one.
you're still in the learning phase. I
That's
guess
it.
we all are, because so let's say I have, 14 million. That's without the property. So let's say a little bit more, right? But I want to get to 100 million. But surely I need to still learn how to get to 100 million. So I'm still in that phase as well.
You're always going to be growing.
Yeah.
Because once you're in the 100 million phase, where are you going to get to the billion phase?
To the next stage, yeah.
You know, and that's the point of always having the appreciation for money and going along that journey. Millionaires or wealthy people are not made in their early teens. They're not made in their 20s. They're made in the 50, 60, 70-year-old. Look at Warren Buffett.
Don't rub it in. Do not rub it in. That is true. Well, it is for me anyway. But I started late. I started really earning money just before I was 30. That's the first time. Because I didn't want to, I just studied, and took a year off, studied, took a year off, studied, took a year off.
But that's the point, right? In the current phase that we are, educational-wise, they tell you if you don't have an education behind you, you won't be anywhere in life.
Even now.
So that's why you keep going.
Do you need an education with AI?
I don't think so anymore.
I don't know. If my kids said they didn't want to go to uni, I'm like, brilliant, just save $9,000 a year.
You say that, but then also, are they going to get the learning experiences that they would have at uni?
Experiences.
The
that's what it's
experiences
all
of
about.
it was amazing.
Yeah, I had lots of experiences. Okay, so what do you think? Let's have a look at this. I don't know whether we can show this, but you got that easy money on the left, earn money on the right, right? So we're just driving the same thing home, but speed of gaining. Right, you do the left, I'll do the right. So you're the easy
On the
money
easy
person.
money side. Okay, so the speed of gaining on the easy money side is it arrives suddenly. You win the lottery, you have a big win on an investment, you got inheritance coming. It hits you like a ball.
Emotionally, you're all over the place. Whereas building it gradually, wealth accumulated over years, discipline, good habits, resilience, that will last forever. Amazing. I think I won that one. Okay, you go next.
So then I think I know where we're going here. So the satisfaction levels, short-term thrills, right? Because they don't have the behaviors, the habits, and it's just like day to day, what can I do now? How can I make my money spent for me? How can I now have a bit more happiness than where I was?
That sounds terrible. I think it's more about sustained satisfaction, money earned slowly but steadily, providing long-term confidence and a sense of achievement. I think I won that one.
I think
okay.
you won that one as well. And then emotional spending risks. You get impulse buys, flashy cars, property purchases, and that can lead to regret or financial collapse. As we say, is it sustainable once the money's all gone?
Yeah, I think better would be more disciplined decisions, gradual wealth. I don't like slow wealth, but how about gradual wealth? I like that one. Gradual wealth, allowing for calculated investments, long-term planning, and a certain amount of risk management.
Yeah,
I think
you
I
won
won that one.
I think 3-0.
Yeah, 3-0, amazing.
So the summary.
A bit like your last football game, no doubt. Okay, so summary is both could result in long-term wealth, but investing builds stronger habits, which you can teach your children. There is a system behind it, whereas the easy one, what's the system? Buying another lottery ticket? Well, the chances are negligible.
Yeah, of course.
That's a good word, negligible.
Negligible.
Say that again?
No, negligible. There's another word that I can't say.
Oh my God.
What was the other one? Illegible.
Who? Eligible.
Eligible.
Oh my goodness me. This is what I have to deal with, by the way, on a daily basis around here.
I know, but it shows that you don't have to be a brainiac to be successful.
That's a good word. Okay, 3 ways to keep wealth once you get it. What do you think one of them might be?
Treat every pound like you've earned it.
Okay.
Because again,
Yeah.
all the money that you work hard for, when you're spending, subconsciously you go, right, how can I make that money back? Because you already know how long it's taken to earn the money.
I love that.
So the subconscious of you goes, okay, if I'm spending 1,000, it's going to take me a month to make that back through investing. Is it worth that money?
Yeah. I like that. People don't really, when it comes to money, it's weird. It's like, it's a whole different thing. Putting systems in place.
Yeah.
If I say the words like putting a budget in place, people go, budget. It's like restrictive. So let's not talk about budget. Let's talk about like a system, like our pot system, our money management system. There's rules, you follow them, and it allows you to actually spend money every single month, and you have to spend it. And that's the kind of the fun pot. Amazing. You have to spend it. You have to spend it. Yeah.
The jar system is definitely, when you use the word system rather than budget, it does show that there is more expansion to a system. Budget, there's a lot of
They're restrictive.
constriction,
Yeah. Okay. Invest. Yeah. Don't save. That would be the final one.
Yeah,
You've got to learn how to invest. This is a non-negotiable now. I was talking to the guys out there about the fact that with AI now, like before, having this second pillar, we always talk about second pillar. So there's your first one. You've got your incoming, and now you've got a second one to steady the ship. To have a really good, like, solid base. That's nice. But now with AI likely to take the majority of jobs within the next 3 to 5 years, and a lot of them within the next 1, 2, or 3 years, it's no longer nice to have, Keith. People need to invest. And if you're listening to this, please, you need to learn how to invest, to grow your money without you working harder, because you are going to be stuffed in a few years.
A lot of service-based jobs are going to go once AI fully comes in. And once it reaches that sentient level. So the end of the day, you need that money working harder for you. A savings account doesn't do that anymore. And again, when your money in the bank, we've already spoke about it a couple of episodes ago, your money's not technically there. The number's there, but they loan your money out to other people. So
but also, Keith, when somebody says learn how to invest, they go, oh, I won't be able to. Like if you're in your first 6 months to 12 months, you're just learning how to do it. And then, the year after, within a few short years, you are making some serious returns with simple strategies.
I always say it with our members. Year 1 is bringing the foundation, learning how to do it.
Good.
Year 2 is building experience. Year 3 and onwards is building consistency.
See, now that you say that, now it sounds like it just takes too long.
Of course, because everyone wants that get rich quick, that immediate gratification.
But those years are going to happen anyway, so you might as well learn.
Yeah, the sustainable investors and the people that actually become wealthy in the next few years, they're the ones that have that foundation. They're the ones that have the experience. Now, think of it in the short term, it's 3 years. It's a long time in the short term for most people.
Does it take 3 years to learn how to invest?
Not really.
But
So
what are these processes? Like in your first year, what can you achieve?
In your first year, we're seeing people achieve 20 to 30% on the money invested.
I mean, so there you go. But you're talking about more. You're talking about building wealth. You're talking about 30, 40, 50%. All right, fair enough. That might take a little bit longer. But in your first year, I mean, we always say with a value cost averaging strategy, 15%. Come off it. We make a lot more than that. You must be joking. Okay, so what are we saying? The golden nugget is?
Don't rely on a lottery ticket.
Don't rely on things like that.
Correct.
Yeah. And if something like that does happen, I hope you're ready for it.
But seek people who can support you. Don't just go out and spend it straight away. Talk to people.
And it isn't friends and family.
No, because they're just going to be like, oh, buy me a car, buy me a house.
Yeah. You need to learn discipline. Okay, so we've got something for you here. If you want to stop relying on luck and to get rich, is learn to build wealth by investing, right? So this is going to be free to everybody here. And that is the Lunchtime Trader, which is stocks, and the Lunchtime Investor. The link is in the bio. But I do have to say, the number one thing to me is a system. So I don't know whether we also want to put the link for the money management system, because to me that is the basics that you need to know, right? Final thoughts are sudden wealth can disappear overnight. 30%. 30% are bankrupt. That is so bad. In other words, it's the worst thing that can happen to you in a way.
The probably better thing to happen would be all the money that you won goes. But to be in a worse position than where you were before you bought a lottery ticket, that should never be happening.
So my team here, the Martin, said actually winning it is the worst thing because it'll actually magnify your financial literacy or illiteracy, because you're either going to grow it, so you're financially literate, or illiterate. In other words, it will go to zero, and then some. Which I have to say, I feel sorry for him now. I was really annoyed with him, that guy, but now I just feel sorry for him, and I'm sorry, and should have come to us.
Of course.
Anyway, thank you very much for that.
Great episode.
I think it is time for some food now. So, and we always say, never quit, because we never say if he can do it, you can do it, but we don't want to point to those two examples. They were bad examples. So if he can do it, you can do it too. And we'll see you on the next Lunchtime Investor Show.